Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment. That's Andy Swan, the co-founder of LikeFolio. Thanks for being here again, Andy.
Hey, thank you.
All right, so we're talking about the big stock of the day heading into earnings. Now, the stock's bounced pretty significantly off of 52-week lows that we saw a few months ago after a couple downbeat quarters. Are we seeing a turnaround? I mean, they announced the new ad tier that they're going to release at November 3rd, but this quarter, they didn't have a ton of releases on their platform, and that seems to drive a lot of engagement. What type of data are you seeing out of LikeFolio on Netflix into earnings?
Yeah, they're getting pretty good engagement in terms of LikeFolio data out of The Crown and Stranger Things and the Jeffrey Dahmer documentary. But, there's not that big hit that drives new subscriptions like they've gotten used to in the past. And, I would say overall for Netflix, what we're seeing is that things are getting less bad, but they're still not good. When we look at Netflix, one of the first things we always look at is cancellations and how much churn we can expect, because as you know, that was a big driver of what happened earlier this year. Netflix actually net lost subscribers, and it was a shock to Wall Street. That's dissipating a little bit, but it's still very high year over year. I think the company still has a long way to go to just completely stop the bleeding. We're seeing new subscription mentions down 30% year over year, while cancellation mentions are up 118% year over year. And really, this is part of a larger trend in the streaming space, because people just kind of have too many subscriptions. It's something we at LikeFolio call subscription fatigue. You can see it here. People talk about canceling their Sling TV, their Apple TV Plus, their Amazon Prime Video at monstrous rates compared to on a year over year basis. Netflix kind of middle of the pack, which is good. It's one of those that's typically one of the last things people will cancel. But I think overall, there's this kind of malaise around streaming. It's had its big initial run. Netflix was the king of the heap for a very long time. Now there's so much competition that consumers are getting saturated. Netflix rose prices, which caused some cancellations. And really, when I talk anecdotally and somewhat in our data, what we see is people just kind of pick and choose what they want to be subscribed to when they want to be subscribed to it. People will actually, start a subscription with one service in order to watch a specific show or series. And then when that kind of fades off, they'll cancel and then hop to another one. It's really easy to subscribe. It's really easy to cancel. It's, the loyalty is disappearing. And so I think overall, Netflix is an amazing company. We expect to do very, very well over the next few years. But in terms of this earnings report, I think the risk is probably a little bit more to the downside.
Andy, Basic with Ads is their new platform that's going to give about 4 to 5 minutes per hour of commercials. But this doesn't start till November 3rd. All their good news about this new ad-generated revenue isn't here yet. So they got to rely on an overall improving environment for this earnings call. And your data doesn't give a lot of good news. So is the lion's share of their good story that's made the stock rally, is that all in the future and possibly not in this earnings report? Are we setting ourselves up for a disappointing earnings report, or is this overall company recovering ahead of this good news coming in the future?
Yeah, I actually think it's both. I think the company is recovering. I think the company, is doing a lot of the right things. I think investors are a little ahead of themselves, expecting, a new product tier or a new ad-based model to work brilliantly right away. I mean, Netflix has trained its entire user base, and in fact, the entire world to, expect content without ads. So it's a big hurdle to get over for them, not just technologically and not just, they'll have no problem attracting advertisers to their platform. Advertisers are hungry for that. But, from a user perspective, from a viewer perspective, I think they've really trained all of us really well to not allow or accept ads. And so that's going to be a hurdle to get over. I think the company's doing the right things. The market may be ahead of itself in terms of expectations for those right things playing out. And the way that the stock has moved, it's kind of in a little bit of a range now. I'd say just, eyeballing it 200 to 250 kind of range. We're near the top of that range. And so I just think, from an earnings perspective, with the amount of cancellations that we're seeing across the space and in Netflix specifically, risk probably more to the downside than the upside on this particular call.
Yeah, Andy, your data is kind of glaring in this regard because full disclosure, I do this when you watch something on a streaming service and then, you kind of get through the stuff you want to see, you cancel it, and, these streaming companies allow you to do it. You can do month to month. Is this foray into that 4 to 5 minutes of ads, that tier, trying to hook people where they don't cancel every other month or every third month and then get back on when a new show comes on? Is this a way for them in the long term to get a hold of subscribers and keep them? Because, the top premium edition of Netflix is getting up to $20 a month. And that's why I think people, cancel these subscriptions and then get back on when they want to. Is that a concern?
Yeah, I think it's a concern, and I think that's Netflix's bet, is that if the price is low enough on your credit card statement, you'll kind of skip over it and not cancel. I'm not 100% sure if that's true. I think that probably at some point, if I could whisper into the microphone here so that Netflix executives don't hear it, probably at some point they're going to have to go to some kind of a contract model like everybody else in the history of entertainment has gone to, whether it was cable or satellite providers. That was always the way that they got you in the door and kept you hooked, was by contracting you in and making it not so easy to cancel. So I think eventually that's probably where this ends up. But the ad-supported model is cool. The data is just not there yet. We just don't know how successful this will be. I have my reservations about some of the modeling that Wall Street has done out into the future. I think it's perhaps overly optimistic, especially in that first year. So, this could be just a case again of Wall Street just getting a little ahead of itself. But it's understandable because you're betting on one of the best companies in the world and a company that has executed beyond all measure for the better part of a decade and a half. And so, I understand the investors' willingness to bet on this company executing on a brand new business model.
Yeah, I think this quarter is going to be about the results and subscriber ads, but also guidance from Reed Hastings. He's usually pretty upbeat about their expectations moving forward, and they're charging more for ads on Netflix than other streaming services. Disney Plus is releasing theirs, and a couple of others will have those at lower price points too. All right, Andy, good stuff. Real quick, Andy, before you go, you said you're pretty negative on this one. Do you have an earnings score going into these results?
Yeah, we're bearish, just mostly based on the price range that we're in. So I would definitely be risk defined on the trade. If this does get above 250 on an upbeat report, it could really move. So I'll leave that to you guys you guys are the experts at setting up that type of trade that we can get into without shorting a $250 stock. Definitely not something I would recommend.
Yeah, and this stock's up about $80 from those midsummer lows that we had of about $162 a share. So it's had a good run. That's for sure. All right, great stuff as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder of LikeFolio, breaking down the data on Netflix. Man, cancellations across the board. But think about it, Kevin. You don't have to get the ad-supported tier at a cheaper price. If you're just going to subscribe to Netflix for a month, cancel for a month or two, hey, they got a new show, I'm going to subscribe again. It probably all washes out without having to look at ads, right?